Welcome to Tradiers, the Trader's Edge. I am Jim Urio. That's Bob Iacchino coming to you live. How are you, Robert?
Good. How are you, buddy?
Okay, there was a slew of data today. All of it seemed to suck to me. Calls into question a couple things. We've had these 4 independent inflation data points over the last 3 weeks that made everyone seem somewhat euphoric. But everyone seemed to kind of not consider the fact that perhaps it was indicative also of I don't know if collapsing economy is the right way to say it. That seems a little hyperbolic, but an economy that's definitely slowing faster than people think. What's your interpretation of it?
I think the people that hung on to a reflation scenario, myself included, pointed to single data points when inflation was consistently heading lower about 6-8 months ago, saying that it's not going to get to 2%. We hung on to individual data points.
Right.
And I think people that are looking for a slowdown are now hanging on to individual data points. I say it's the weakest data we've seen in a while, but it's still just like one set of data. And there can be reasons for blips, especially in things like PMI can be volatile. Some ADP certainly can be volatile. But the numbers are weakening. You look at, for example, jobless claims, nowhere near a danger zone at all. 238,000 weekly. Average recession jobless claims is above 340,000.
Okay.
So we're like nowhere near it yet, but the economy's slowing. I think it's undeniable at this point.
I believe that too. And our next guest is going to have a lot to say about that. And I've said a million times, I'm going to say it again. I don't care if you're bored about the things I say all the time. You can think that Bobby and I are stupid idiots and our opinions are dumb, but you cannot deny the fact that we get outstanding guests. We had another one today. Let's bring in James Fishback of Azoria. Okay, here's why I get fired up for having James on for the most part. We can talk macro, which we're going to do at the beginning. We can talk incubate debate a little bit because you are the handler of one of our good friends of the show, Brianna Watley, who we adore. And you can talk about politics a little bit because you were involved in the Vivek campaign. Thank you so much for being here, James. How are you?
I'm doing great, Jimmy. Bobby, great to see you. Happy early 4th. It's going to be a great conversation, no question about it.
What do you do on the 4th? What do you do to celebrate?
You know, I spend the summers in DC. I live full time in Florida, but I get away from the heat and humidity of Florida to spend time here in DC. So actually good to be here in our nation's capital for 2 reasons. 1, because of the 4th, and 2, because there's a slow moving coup happening a couple blocks from where I am at the White House, where the forever qualified Kamala Harris is looking like she's going to be the 47th president of the United States.
When I think of Kamala, I can't help but thinking about the passage of time and how time passing reflects on that passage of time and the burdening. What the hell?
I can't help but thinking of things that can be unburdened by what was.
By what? Like I've tried to give up drinking several different times, and then I hear Kamala speeches, and I cannot help but pour the stiffest drink I've ever seen. How is this going to play out, James?
It's incredible, actually. I think it speaks to a much deeper problem in this country right now, which was up until a week ago, the mainstream media would not entertain any discussion, debate, or dialogue on President Biden's cognitive abilities. They would cut off guests. They wouldn't print op-eds. You saw what happened when the Wall Street Journal published this deeply reported piece on his cognitive deficits last month. Everyone lashed out against it. Now the mainstream media has given us the green light to actively debate something. And that's been, up until this point, a disservice to Americans who had real concerns and questions about President Biden's cognitive abilities. And so I think the deeper problem here is that we have to be able to debate, to ask questions, to scrutinize, of all people, the president of the United States. We're now seeing that, but it's a little too late. We should have known that even before we had the 2020 election. And so I do think at this point that President Biden's days are numbered. You'll have to remember, too, we just learned with the Claudine Gay scandal that up until the moment she resigned, everyone at Harvard was steadfast that she was going to stay and she wasn't going anywhere. So I pay no attention to talking heads like Barack Hussein Obama, like William Jefferson Clinton, who continue to suggest publicly, privately is a different story, that President Biden is in there. Again, this is escalating quickly. You see it in the prediction markets. Biden went from being a 5% chance of dropping out to, at this point earlier in the day, hitting almost 80%. And so his days are numbered. Vice President Harris, as much as I disagree with her, she's the obvious pick. I never saw Michelle Obama, Hillary, or Gretchen Whitmer as someone to come in. She's the vice president. She takes it. I'll tell you something about Kamala Harris. She is a tenacious woman. She has, as the kids say, she has that dog in her. She is not letting anybody take this from her, least of all Michelle Obama or Hillary Clinton. And so it's like Occam's razor. The simplest explanation, the simplest path from here is the most likely. President Biden resigns in the coming days. Vice President Harris becomes the 47th president. And regardless of what ends up happening there, President Donald J. Trump will win the 2024 election and be inaugurated as the 48th president of the United States.
Bobby, I want you to ask the next question, but I have two things to add to that too. You, the journalist, and I say this without any, I'm not laughing at all. If you 3 weeks ago, 2 weeks ago, reported to us knowing full well that they were not deep fakes, that those were real videos we were seeing, if you reported that and you haven't resigned yet, resign tomorrow. You are not a journalist. You're a propagandist. You are a hack. Stop it. And another thing, one of my favorite people in journalism, who I won't mention his name, reported today about Joe Biden saying something like, well, remember too, he is a man with a family, so let's go easy on him. Bullshit. I will not go easy on him one bit. He's the one who put himself in the position of president. Once you do that, you kick open the door to any criticism that I feel like giving. Sorry, there's my rant for today, people. I just wanted to get myself going. I had a lot of coffee.
But Jimmy, you're absolutely right. And you know who's a man with a family? President Trump. And look how they've crucified him. You know who's men with families, men with families? U.S. service members who were kicked out of the military because they didn't want to take experimental family. You know who had a family? The peaceful January 6th protesters who went to the Capitol to exercise their First Amendment rights about election integrity to being thrown in prison. And now we have a Supreme Court that stood up and said, oh, wait, you can't prosecute people under Sarbanes-Oxley for protected expression in the halls of the people's house. And so I'm sick of President Biden and sick of this idea that we have to pull the punches. He is the one who promised to unify the country on Inauguration Day. I almost believed him for about 24 hours. And then he threw vaccine mandates on our brave warriors, our brave service members, be it in the United States Army, Navy, Air Force, Coast Guard. And that really was a sign of massive disrespect for the men and women who have given so much to our great country.
You know, I have a hard time with this. I really do. And this is going to disappoint all the people who like to call me MAGA troll, you know, right wing.
I call you way worse than that.
I should be with all the fascists and Nazis and bigots and all that. I can't help, as someone who spent the last 18 months of his life with my father who had dementia, not seeing the exact same thing. The person that I dislike the most right now is Jill Biden.
Yep.
I'm sorry, Jill Biden. Sorry. Got to remember that.
Yeah.
Is because watching him try and slag through these things with that slack-jawed look that I saw my father so many days is so upsetting to me. And I think we all agree that if Biden was ever running the White House, it hasn't been for the last, say, 2.5 years, right? And those are the people that we'll never find. Maybe we will find out who they are, but those are the people I feel you should lock up and throw away the key. I feel like if you're going to lock up Biden, you needed to have the political and journalistic honesty to do it 5 years ago, 10 years ago, hell, even 4 years ago. Right. And now it's like you get mafia guys and outfit guys that get arrested and then they don't get jail time because they're elderly and infirmed. Right. At least they fake it like they are. That time's passed for this guy, in my opinion. But here's what I want to ask you. In terms of first female vice president, Kamala Harris, first female president, Kamala Harris, what's that going to look like in the history books as a history buff, James?
It's going to go down really as maybe the greatest political comeback. I mean, she was down and out just 6 months ago. No one was taking her seriously. It was an active discussion in party circles to remove her from the ticket. I got to give her credit where credit's due. She didn't get a single vote in the 2020 primary. She didn't get a single vote in the 2024 primary. She's been smart enough to kind of stay out of the public sphere in a way that Vice President Pence didn't, in a way that Vice President Biden didn't under President Obama. And so part of it is I couldn't disagree more with Vice President Harris on policy and substance. I actually got to know her husband pretty well when he came out and volunteered for Incubate and spoke to our students. And I deeply respect him for that, for talking about things like bridging the divide in America and what it means to be an engaged citizen. But as a investor, as a trader, as someone who I think personally to say has ruffled a couple feathers in my own career, I respect Vice President Harris for the hustle of being able not to get a single vote in the last 2 Democratic primary elections. And what looks like at this point, a very high likelihood of becoming the first female president of the United States. And I'll tell you, I don't like Kamala, but I don't like Hillary even more. And so part of me is happy that Hillary gets to see Kamala, who didn't really have to do anything, become the first female president of the United States. And Hillary, she's going to be on suicide watch for a couple of weeks when this goes down.
Well, I just got to say real quick, I think you'd make a great head of global macro somewhere. Anyway, go ahead.
Allegedly, Bobby. Allegedly.
Let's talk about what the actual real world market implications are. I know you heard Bobby and I talk about potential volatility. Literally, we're sitting on the precipice of history. Whatever happens in the next 3 months is going to be taught in history classes for the next 200 years. I think all of us agree to that. The dollar has come off a little bit over the last week, but after the debate, stayed relatively strong. I personally believe that's more of a commentary on the euro and the yen being trash currencies as well than it is the dollar itself. But VIX is sitting around 12%. Like nobody expects any big risk event to happen and smack us in the nards. By the way, side note, we're trying to bring back nards. It came from the 70s. We're trying to reinstitute it right now. And any help you can give me on that front, I would appreciate. What do you think is happening from a macro standpoint in the markets?
It's a great question, Jimmy. It's a really good one. And, you know, we got to separate markets from real world. I mean, look, spot VIX right now is hanging around 12, but August VIX is 1450. So the curve is pricing a little mean reversion there. We know that mean reversion, that contango, to essentially be a premium that most of the time does not work out in the long's favor, but ends up working out to the short's favor, that there's always this premium that can be extracted by being short vol. I think the bigger thing that actually matters here from a high level is you don't get equity volatility or market volatility unless you're getting real world policy volatility. And so a move from President Biden to President Harris doesn't actually change much when it comes to tax code or when it comes to foreign policy or when it comes to what the next budget might be. And so unless you're going to get some radical policy change between those two candidates, and there's no indications to guys that's going to happen, then you're not going to get real world political volatility. And without real world political volatility, Jimmy, I don't see how you can get market volatility. We know the seasonals behind what the VIX curve does, especially in the summer months. And so while I wouldn't want to be hanging out at the Capitol Grill here in Washington, D.C., with all the martini drinkers complaining about whether or not they're going to have a consulting gig in 2 weeks' time, there's a lot of volatility in that sense. But policy volatility, which you and I both know to be a driver of the VIX, the move, let's say, from what the markets thought was going to be President Hillary Rodham Clinton to President Donald John Trump, that was a big move because the underlying trade dynamics, fiscal policy dynamics, regulatory dynamics were changing in real time. And that lends itself, that underwrites equity vol. I don't think you see that this time around because aside from the ability to speak in rhymes and speak somewhat coherently, there really is no policy change between Biden and Harris.
There's going to be a comedy change.
There's going to be a huge, I mean, Trump nailed it, right? The wheels on the bus go round and round, and the bus goes here and the bus goes there.
It's about the passage of time.
It's about the passage of time. And so everyone wants to talk. I mean, I see everybody on X talking about why is the VIX so low and there's a political change. The burden is on you to say why the VIX and why volatility is going to rise. And so, you know, funds like Azoria, we've been traditionally short that volatility because we think that buyers of all continue to overpay. It's one catalyst after the other, which may or may not materialize on its own, but also may or may not materialize with any meaningful market impact. And so because you're not going to see any policy change between these two candidates, you're not going to see any market change as a result either.
And the burden, of course, is unburdened by what has been.
But what has been, by the way, what has been that vol sellers have gotten crushed over the past 5 to 10 years consistently.
And so the future's unburdened by that. I have to.
And the future's in more ways than one is unburdened by that. Exactly.
So let me ask you, and we should get to things that are more timely, but I can't, you're the perfect guy to ask this to. Stock markets go up in election years. I'm talking about probabilities, not guarantees. The stock markets do well 75% of the time in the 53 times that we've had a positive first half, a double-digit positive first half. 75% of the time, the second half is positive, with the mean being about 4.5%. That's also about 100 basis points higher than a normal second half, right, where anything happened in the first half. In this particular case, a lot of people, you're starting to see the news stories because, again, they have to find a way to attack former President Trump's policies now, because they can't say the other things because he's going to win at this stage. We'll see. Who's more inflationary? And you said there's no policy changes. So
Right.
which regime, let's call it, for lack of a better word, would be more inflationary? Because a lot of pundits are out there on the left saying that the Trump regime would be more inflationary.
It's a really good question. And the reality is there are going to be elements, Bobby, of both administrations that are going to be inflationary. There are going to be. The question is in aggregate. In aggregate, President Trump's policies deliver for the American worker. Let's just talk about a couple of them.
Sure.
When you roll back regulation, crippling regulation on US energy, and allow us to drill, baby, drill, both for oil and for natural gas, you are directly lowering energy costs. When you unburden the private sector through lower taxation, through actual tax relief on the individual level, you are allowing people and you are incentivizing work. And so I think the biggest thing is that look at what's happened under President Biden. Look at the fact that we now have 6.5 million Americans, a record, by the way, who are working more than one job to keep up with inflation. My friend Vivek always says that inflation, of course, is a cumulative number. And so just looking at the inflation numbers this year, obviously things have slowed down. They're still pretty high, though. It neglects to incorporate the inflation that we saw in 2021 and in 2022 that was a direct result of President Biden's policies. Let's start with one, the American Rescue Plan passed in April of 2021. Well, it was a misnomer. What on earth was there to rescue, Jimmy? But when we had 150 million Americans who had immunity, when unemployment had gone from 15% back to 6%, President Trump was reopening the economy. Governors were stepping up, with a couple of exceptions of blue states like New York and California. Capitalism and normalization were doing their magic. And here comes President Biden, just as the guy is getting checked out of the hospital, the COVID patient, right, that is the US economy, and says, sit back down. We're going to give you another round of heroin. We're going to give you another round of morphine. And that's what really kicked this into high gear. Let's talk about it. Stimulus checks, inflationary, PPP, inflationary, those generous federal unemployment benefits that said to people, hey, don't work and you're going to get paid more if you don't work than if you do work. And that's inflationary for two reasons, Bobby. The first reason is they're not working, and so that contracts labor supply. And so firms have to bid up their wages and then pass those costs down to the consumer. And the second reason is because now they have more money because they're making more money than they would have otherwise been while working. And they're now pushing that money into the economy. Inflation is often too much money chasing too few goods. And trust me, there were too few goods at a time when there was container shortages and a lot of supply constraints at the ports on the East and West Coast. And so Bidenomics has been a disaster since day one. Let's just talk about the facts. When President Trump was in there, inflation averaged 1.9%. President Biden, inflation has averaged 5.3. And the reason why is because Bidenomics does not work for Americans. It is anti-business. It is anti-capitalism. It is anti-worker. President Trump is pro-business, pro-worker, pro-capitalism. That's really all that matters. And so, as we saw in George Orwell's 1984, their most essential and final command was for you to reject the evidence of your eyes and ears. There's a great irony that the Biden administration talks about lived experience when it comes to transgender people and indigenous people. But what about the lived experience of working class Americans who know that their grocery bill, their electric bill, and their gas bill across the board are up double digits today versus under President Trump? And so look at the lived experience of working class Americans, and anybody in your life, either Jimmy or Bobby or anyone listening, ask yourself, hard look in the mirror, were you better under Trump or are you better under Biden? And it's just that simple. So look, could tariffs be inflationary? Yes. On the margins, they could be. But also remember that tariffs are a means to an end. Inflation has to be weighted against the real national security risks of China ripping off our IP, producing all of these semiconductors, potentially putting a risk on Taiwan. And so everything has to be weighted out accordingly. And at the end of the day, you judge these people by their track record. You know, the biggest phrase in investing, the most cliche one, is past performance is not indicative of future results. Obviously, wink, wink. But if you take Biden's past performance, you take Trump's past performance, there's an obvious candidate here who can actually deliver for Americans, and that is Donald J. Trump.
Okay, so I want to I wanted to push back a little bit, but then you said a key part toward the end there. And I love what you said, but I'm always of the opinion that there's basically two things where a president affects the economy. Number one is trade. And number two is the regulations that they can do something about. And I would argue that obviously Trump cut a lot and Biden added a few, rolled back a lot of those regulatory cuts and then added a few more executive orders than any president. But that's been a trend, right? Sure. Ever since Obama. So where specifically do you think Trump's pen will do the most work? Again, I think he's winning. So I want to talk like he is. If all of a sudden, you know, Jesus Christ comes and takes the Democratic nomination, then we got a little bit of an issue there. But from this perspective, what is he actually going to do with that pen, do you think, knowing this whole side of it as well as you do?
It's a good point, Bobby, and I would push back on your pushback respectfully.
Please do.
And I would say that you don't judge executive orders the same. When President Trump signed executive orders to roll back crippling regulation on the men and women in our oil and gas sector, that's a good thing. When President Biden assigns executive orders and forces pointless, crippling regulations on American businesses, that's a bad thing. And so I don't blame President Trump. He should actually get a lot of credit for using his executive powers within the Constitution to push back on these awful regulations and to liberate American businesses and capitalism to do what they do best. And so I would really have to look tit for tat and look at the exact executive orders in question. But they're not apples and oranges, right? What Biden has done on the executive order front is to heap regulation after regulation to increase the cost of doing business, to disincentivize new investment, to disincentivize new growth. And what President Trump did, you judge him by his works. And so executive orders is one thing. But I got to say, we heard a lot from these so-called experts last week when they signed this letter. The Nobel laureate signed a letter that said that Donald Trump is going to be awful for inflation and for the U.S. economy. Here's the only problem. They copied and pasted every single one of their arguments in 2024 that they used in 2016. Every prediction they made, from inflation to unemployment to growth to recession, was proven wrong, not by some economic theory or some model, but by the lived experience of the U.S. economy and 300 million Americans between 2017 and 2021. Here's what Paul Krugman said the night of the 2016 election. Quote, "It really does now look like Donald Trump is going to win and markets are plunging. When might we expect them to recover? I'm sorry to say that the answer is never." That's what Krugman said. Here's what's the truth is. The markets have doubled since the 2016 election. And so the economists, 98% of them, if you look at just the Harvard Economics Department, 98% of them donated to Democratic causes. These are deeply partisan individuals. They should not be taken seriously on that alone. But if you actually ask them to refute Trump's policies on their merit, they Control-C, Control-V, copy and paste the exact same arguments that were horribly disproven this last time around. They cannot be taken seriously. I listened to the businessmen and women across this country who said that Donald J. Trump was the best thing to ever happen to the American economy. And that's what's set to happen again.
So look, all you have to do is look at small business optimism chart, and it'll show you exactly what businesses thought of Trump. I took a little heat on Twitter last week when I posted that, I knew more about economics than Paul Krugman and Joseph Stiglitz. And I was like, people, stop. It wasn't any sort of big brag. It's like me saying I know more about economics than a Chihuahua. These are people who I don't know what their strength is, but it certainly isn't economics. It's probably taking money to be propagandists, but they're absolutely ridiculous. Now, the Chevron doctrine was overturned last week. And for those of you watching, in a nutshell, it used to say that these unelected agencies could force all these regulation on different businesses, and it was overturned. It seems to me like a pretty big deal, but James, I want to know if you think it's a pretty big deal.
It's a huge deal. It is an absolutely huge deal. We overcame really bad precedent. We're taking power away from unelected bureaucrats. You and I don't know their names. They're unaccountable. They're unknown. And we're actually creating a system where people can petition the courts when it comes to burdensome regulation and burdensome policy. And so overturning Chevron, if they're going to look back on this in 25 years and said that unleashed a whole new layer, a whole new level of growth and optimism for the US economy. And you bring up small business surveys. You know what the number one concern for small businesses is today, Jimmy? It's not interest rates. It is inflation. Businesses are hurting just as much. Remember, businesses are people. That's the truth. The local diner, the local dry cleaner, the local tree trimming service, which my dad did for 20 years before he went on to be a bus driver for Broward County. They are the ones hurting just as much as working class Americans are. And so inflation, which is a direct byproduct of Bidenomics, is crippling the U.S. economy. That's what we need to handle first and foremost. I lay a lot of blame at the Fed, but rates today are really not all that restrictive. And businesses themselves, they're not complaining about rates. They're complaining about prices.
I can tell you, I have a restaurant literally, and I'm not even like boasting when I say it. When Bobby can attest this, one of the most consistently crowded restaurants in the northwest suburbs of Chicago.
Yeah.
Our expenses have gone up probably about 55% in 3 years' time. And people think, oh, it's just supplies. It's not supplies. It is labor. It is taxes. Right when we were hurting the most, taxes went up. My estimate is that I don't know if you've seen in independently owned restaurants, they're at like decades high of delinquency on loans at like 55%, something ridiculous like that. I bet within the next 2 years, unless something materially changes, i.e., rollback on regulation and getting inflation under control, many of those are going to go out of business. I wanted to switch it to this Keynesian nightmare we're in right now, where we are spending money like drunken sailors, despite the fact that they look us in the eye and say that we have this outstanding economy that's right now getting us about 1.3% GDP for your money, which is probably a bullshit number to begin with. I believe today's data points showed that we are something is cracking in the economy. Okay, in the past, we just say, okay, the government just ramps up spending a little bit, takes the sharpest edge off. What do we do now where we already are accumulating $1 trillion of debt every 90 days? Are we up a creek?
This is the $1 trillion question, right? Which is
a $35 trillion question.
35 trillion and then 1 trillion if you talk about interest expense that we're going to be paying a year.
Bingo.
It's a really big problem. The Fed should have normalized policy. Look, inflation CPI first hit 5% in June 2021. Did the Fed hike in June? Did they hike in September? Did they hike in? No, they took 9 months. They didn't end up raising rates from 0, by the way, to 0.25% until March of 2022. And so a lot of this blame has to go to the Fed. But it often reminds me of this idea that what you see in the economy isn't exactly what you get. We as macro traders, as folks who are in the business, Jimmy, you're trading SOFR futures, something that is kind of my bread and butter these days, is that we have very much a K-shaped recovery. If you have a mortgage and you've got $200,000 in cash, well, guess what? The 30-year fixed rate mortgage may be 7% if you're getting a new mortgage, but because of all that refinance and because of all of those new home sales in 21 and 22, guess what happened? They were able to lock in what is now an average effective mortgage rate in America of not 7 or 8%, but the average American's only paying 3.6%. And that is, of course, a 30-year fixed rate mortgage. They're locked in. Fed could take rates to 50% and they're not going to pay a dollar more. Meanwhile, the UK is seeing interest rates soar and that interest rate expense being passed down. So it's not really a channel by which higher rates are affecting the consumer. Now, again, for those Americans who are fortunate enough to lock in that mortgage and then have, let's say, $200,000 in cash, well, if they're parking that money in a money market mutual fund, they're now earning $10,000 a year, which is supporting consumption in a way that might not otherwise be the case. Remember, rates were 0 for much of the past 10 to 15 years. And so now rates are paying 5.25% on that excess cash. There is an alternative. Now, on the other side of the K, what do we have? We have half of working age men who are not working are taking opioid painkillers every day. We have a record number of Americans who are working multiple jobs to keep up in this economy. We have a divergence between the household survey and the establishment survey. We have our own Fed chairman in Jerome Powell questioning whether the Bureau of Labor Statistics data is actually accurate, openly questioning that in the most watched press conference in the entire financial world. And so I don't know, by the way, that there's one story or the other. It reminds me of that Charles Dickens quote, right? The opening, which of course is, it was the best of times, it was the worst of times. Make no mistake, there are economic statistics today that could support any narrative, one in which the Fed has to hike, one in which they have to pause, and one in which they have to cut aggressively. And so I would say this, the data that matters is the data that matters to the Fed. I'm worried about what's happening to rural America in the wake of deindustrialization. I'm worried about what's happening to urban America in the wake of crime and fentanyl. But as a trader, as an investor at Azoria, my job is to look at the data the Fed cares about and to effectuate investments based on what the Fed is likely to do, not on what the Fed should do. I saw that when inflation hit 5% in June of 21, the obvious textbook example, what obviously all of us would have agreed to, is the Fed should begin normalizing policy immediately. They didn't do that. I didn't bet on them doing that because I understood what they cared about in the moment was they were in the transitory camp. And ultimately, betting on the Fed is not a bet on what the Fed, what you think the Fed should do, but Jimmy, what the Fed will do. And that's how I think about it. And so we're in a K-shaped recovery. Middle class is hurting, lower income is hurting. But if you own a home, if you have assets, you've done spectacularly well. And it's just hard to actually get a read on the economy when the statistics will show one thing, even though the real world shows something differently.
Before, Bobby has a question, but just to point out something you said before, and it's not really a pushback. You said, are any of us better off than we were 4 years ago? Yeah, rich people are better off than they were 4 years ago. Rich people who hold assets, who have money in the stock market. And again, I'm not boasting that I'm some sort of, John D. Rockefeller. I am saying that I'm 37 years of a relatively successful career of trading and investing. I did fantastic over the last 4 years. That's what Democrats do when they have terrible policy, and then the Fed comes in and floods the market with liquidity. Prices go up, but so do the homes that I own, the stocks that I own. But Bobby, go back, another rant. Sorry about that, James. Yeah.
I was just waiting for James to add to that, but there's not much to add to that because that's the issue, right? You end up with an even larger wealth gap when the left is trying to say that that's one of their biggest concerns is the wealth gap. And then they pursue policies that act not only can leave the wealth gap where it is, but encourage it to get wider and deeper. From a perspective of markets, first of all, I couldn't have said it better, and I do say it all the time as well. My job as a strategist is not to say if what the Fed is going to do is correct, right? It's to try and anticipate what they're going to do. The fact that one of the things they used to have an effect on, and you described it so well, is the price of homes. And they're not having an effect on it.
Not at all.
Right now,
yeah.
At all, right? So we have to see it in rents, don't we? I mean, we're going to see it in rents, and there's going to be an even larger faction of people potentially who simply can't afford to live where they want to live. At the same time, the corporations and larger companies are trying to force people back into the offices where a lot of these people can't afford to live nearby. So how do you think personally, and if you have an investment thesis on it, how does that play out? Where you have one side of the coin, we're not leaving our house, we're at 3.8%. The other side of the coin going, well, I can't afford anything. I need builders to start building $150,000 homes.
And those builders are not just not stepping up because of, for them in particular, we talk about in aggregate, right? But for them in particular, what can be a complicated rate environment, but also a regulatory environment that's not exactly incentivizing them to step up. And there's also a third category too, which is the illegal migrants who are coming by the thousands every single day, being given free housing and taking existing housing away from Americans who have built their life here, who have paid their share in so many ways in terms of sacrifices, in contributing to their community, many of whom serving this country in the armed forces. And so there's just so much broken about this current system. But the ultimate cause, Bobby, is that we are not letting capitalism be capitalism. strip off the regulations, let markets do what markets are going to do, and then we are going to come to an equilibrium that's not going to work for everybody. Let's be honest. The equilibrium also at some point is you have to get out of the cities. I bought a house in Madison, Florida, where I spend most of my time in rural Florida. And what I got there on half an acre, were 3,000 square foot, a house that was built 100 years ago, recently remodeled. I'd be lucky to get a studio apartment on the wrong side of Queens, right? And so part of it too is that we have a housing crisis in and around the 30 largest urban areas in this country. If you are able to work online, work remotely, if you want to actually work in a industry that is going to be AI proof, whether that's being an electrician, working with your hands, as a carpenter, as a plumber, you're in good shape. Move to a rural town in America, move to the exurbs of your current community and take up that task. Now, if you're committed to living in New York and working as an investment banker, then yeah, that's a really tough situation to be in. And so I think despite the fact that cities like New York have come back in a big way, surprising to many after 2020 and the broken policies of the pandemic, I think you're going to see a bigger shift over the next 10 to 15 years, moving away from the big cities. We don't have a housing affordability problem in rural America. And so supply and demand are going to find a new level. And part of that is going to be building up in rural America, which, by the way, is better in almost any respect, right? You have less regulation, less burdens. You have more of an opportunity to stand out, to start your own business. And the politics and the culture are a lot nicer as well. And so, again, a lot of blame. We can talk about the Fed, we can talk about government, but a lot of the blame here is not the government of this precise moment in time. It's this idea that we've let government control almost every aspect of our lives.
Okay,
Housing supply can happen. It should happen, but it doesn't need to happen. Look at what happened with these electric vehicle stations. We put how many billions of dollars, and how many did they build, Jimmy? How many electric vehicle chargers did they build? Seven. Right? And so this is the same government that we now tasked with building housing supply, is the same one that spent several billions of dollars building as many charging stations as at my local Arby's in rural Florida. And so government is not the solution. They always have been, and they always will be the problem. And we have to reckon with that first before we can talk about any individual policy response.
All right. So I want you both to use your combined, I'm going to go ahead and say it's 48 years of market experience, I'm leaving myself out of this, to help me with an investment thesis that I'm working on here. Now, bear with me a second, okay? State Farm is talking about leaving California unless the insurance board, the government of California, allows them to raise their rates by 30 to 50%. This will be the third premium raise they're asking for. Two got approved. One was 20%, another was 6%. They're saying we're going to leave the state. And there's other larger insurers, Farmer being one of them, that have agreed with that. They said, yeah, we have to leave the state, right? You don't let us charge enough. Counterbalance that with Florida, which had a similar insurance problem, especially near the coasts, especially after Hurricane Ian, right? Fires in California cost insurance companies about $117 billion. One hurricane cost Florida about $113.7 billion. Okay. And Governor DeSantis, because he works with a surplus, didn't go to the insurance companies and say, you need to lower your premiums, because he knows that some companies need cash. They need to be cash heavy, or it doesn't matter how big a policy you have. If they don't have the money, you're not getting paid, right? They're going to be a lot harsher on what you're trying to get fixed, which they kind of do anyway. What he did instead was he gave a property tax break for people near the coast for 16 months, houses 750,000 and under, certainly so that he wouldn't be yelled at for helping the rich. He made the Fresh Start, not the Fresh Start. What was it called? Oh, the My Safe Florida program permanent. Right. What that is it's tax-free grants for hurricane-proofing homes that can be hurricane-proofs, right? Hurricane-proof. And he did a one-year exemption for other things where the government was going to take over payments for like HOA fees and assessment and things like that. And he was using the surplus that was paid for by property taxes. It was basically using our own money to help people that were struggling. I'm far enough away from the water, right? I didn't have to worry about that. Gavin Newsom, on the other hand, goes out and publicly says State Farm is gouging, right? Now, my thesis is this. Another part of the thesis, Walgreens bought Dwayne Reed in New York City. It's looking like they're going to pull out of New York City. They've pulled out of major centers in Chicago already because of crime and shoplifting. And consumers are not going into a Walgreens to pick up a tube of toothpaste in New York City because they have to push the button to get them to unlock the shelf so they can get the tube of toothpaste off the shelf. I have friends moving here from Manhattan in August. His favorite thing, he's like, I go into every CVS we pass now because I like to look at the shelf without the lock on it. That's his favorite thing about moving to Florida from New York City. So my thesis is this: is there a way to try and look for companies, maybe it's regional banks, maybe it's regional insurers, that are bigger in states that are better on crime and have surpluses than they are in states like Illinois, New York, California, that are easier on crime and maybe have larger deficits and cause some of the same problems? Or is that too crazy to dial down, James?
There's no question about your thesis, and I think it'll pan out. The question always is there an efficient market implementation for that view, right? We often joke in markets that we don't want to be too cute by half. And so our job is to make money, not
cute.
I think with respect, I think it's going to be hard.
I don't need the respect if I say something stupid.
I think
poor guys.
I think it's I think it's going to be hard. I do think there are ways, and I have a friend who looked at the oil and gas sector, looked at labor capacity issues there, and wanted to make a macro bet, but there was no instrument to express it. So what did he do? He went out and did a startup that is now worth $1 billion to address labor capacity issues in the oil and gas sector. And so it doesn't mean that there isn't a way to make money on that view, Bobby. It's just a question of, is there a listed security or instrument at the Chicago Mercantile Exchange or on the NASDAQ that would allow you to express that view?
I'm going to start an ETF called Red State Companies. Go ahead.
Let's do it. And my hope, by the way, is that we are going to see an increased investment. I think one way to play that, by the way, is just owning good real estate in places like Florida, as you see that continued exodus out of places like New York and California. But I would just say, I voted for Governor DeSantis, of course, twice now. A big fan of what he's done for Florida, especially for education. But I do disagree with that particular policy because I really am an absolutist when it comes to free markets and capitalism.
That's fair.
My view is this: when hurricanes come and decimate coasts, it becomes clear that that land is unlivable. Now, if you want to live there and you want to cover your own insurance costs and self-insure, that's fine. But don't put that burden on the taxpayer or on the state surplus or whatever the case may be. If my home, heaven forbid, were to be flooded on the coast, I think it would be rather selfish of me to put that on government and say, you take care of it. You take care of my risks. If I want to live there, so be it, but I'm going to pony up the property insurance to do so. And I think so much of our problem, whether it's in wildfires in California or hurricanes where I grew up and now live in Florida, is that we are still willing to build up in areas that are clearly more prone to flooding and hurricanes. I am not a believer in the climate change emergency hoax, not one bit. Not least because the science is highly dubious, and also because there are real ways to adapt to these realities, like not living on the coast of Fort Myers Beach and moving more inland. And so if you don't want to take that risk, if you don't want to move, the government, whether it's a surplus or a deficit, cannot cover you. That is not exactly free markets. It's not free markets at all. And so I say the same to anybody who's in that position. And so I agree with Governor DeSantis wholeheartedly. I also disagree with this policy they instituted recently, which is to ban lab-grown meat. I would never eat it, by the way, not in a million years. But I also think that competition is good. If lab-grown meat is so obviously inferior, let the consumer vote with their feet. If Bobby Kennedy was actually some radical fanatic, then guess what? Dr. Peter Hotez would have been able to expose that had he agreed to a debate. Competition, whether it's in markets with respect to lab-grown meat or whether it's in the competition marketplace of ideas, should always be welcome. No business no business should be shut down by government because they deem it to be a threat. That is much closer to socialism, communism than it is to the capitalism that made America great.
So can I answer then the question too? Because there's a lot of what James said that I completely agree with. And without the backstop of the government, the coasts of Florida would probably look a lot different. I'm not saying that people wouldn't live there. I hope they do. I hope they enjoy the cost. But there might not be these $10 million homes. There might be, very, very hurricane-proof, smaller dwellings built there. I think we have actuaries who can figure that shit out. We don't need government involved with it. Now, as far as that then extends to what my answer is about investing or not investing in these is blue as Democrats, right? In these blue states and blue cities. Because it used to be that you could take a look at the municipal bonds, the municipal bond ratings, and say to yourself, well, shit, I'll sell the hell out of New York. I'll sell the hell out of San Francisco and Chicago. And that's how I'll make my money in the muni market, but, and juxtapose it against a better place. But that doesn't exist anymore because every one of our bonds in the state of Illinois, I believe, and I'm curious if James agrees, trades with the implicit backstop of this collectivist government. The federal government will back Illinois if need be. And no longer does that actual market mechanism reflect reality as well. So it's all about government getting involved and obfuscating the way an actual market moves. James, do you think that has validity?
Absolutely. As Karl Marx said, from each according to his ability to each according to his needs. The ability of states like Florida to print budget surpluses to be fiscally responsible indirectly subsidizes the reckless spending of places like California, Illinois. And so if you ask any municipal bond investor, they know that investing in these markets comes with the implicit guarantee of the U.S. federal government. It shouldn't. Again, capitalism that is crony is not capitalism. You cannot have backstops in a capitalist system. You just can't have it. Nope. You can't have backstops in capitalism. Not backstops for the millionaires who live on the coast of Florida. By the way, it's beautiful. You don't have to live where. We can make them national parks. We can hang out there. We can barbecue there. But also I say to those who want to live within 20 miles of areas in forest in California that are prone to wildfires. So much of this pushing back on the climate change emergency hoax is this idea that we can never adapt. We can adapt, and the easiest way is to move away from areas that by the way, not necessarily because of recently, but have always been historically prone to flooding, to wildfires, to hurricanes. And so I am vehemently against backstops, whether it's for big banks, whether it's for hedge funds, whether it's for homeowners living on the western coast or the eastern coast of Florida. Government has absolutely no business in covering your downside. You need to do that yourself.
I love that. Real quick, I wanted to ask you before we run out of time, give me stocks, sectors, ETFs. I know you're a pretty nimble guy. You trade a lot of SOFR, but you always know the macro story. I think someday you should work as a head of global macro somewhere. I think you're perfectly suited to it, allegedly. Give me something that the viewers can take back and say, I'm going to investigate this for myself, which you should do, by the way, people.
I think that stock to own right here, right now is Tesla. And it's because if you look at Tesla, it is not a car company. It is an artificial intelligence company. I say this as someone who worked for the short seller of Tesla, someone who was there and was kind of really drank the short selling Kool-Aid about this company until I actually went out and got the car at the end of 2022 and have incrementally seen how good this car has been at driving itself. The newest version, 12.4, now allows you, Bobby, to drive the car without touching the steering wheel. It takes you from door to door, driveway to driveway, parking spot to parking spot. It's like a ChatGPT movement, which happened all of a sudden in 48 hours in November of 22, but now it's happening in a slow motion way. We're warned in the investing world, Jimmy, to not trade on material, non-public information. I have an admission to make, which is I have traded on material, non-public information with respect to Tesla, which is to say I own the car. I see what full self-driving and what Tesla AI is doing today, what it did a month ago, and how that compares over the course of the last couple of years. And so I would say pretty simply, you are at a severe disadvantage investing in this company, long or short, unless you've actually driven the car. And to anyone out there, go on Turo, go on Hertz, drive this car, use full self-driving, not just the simple autopilot, but actual FSD. This will blow you away. Imagine a world, Bobby, where you can simply get in your car and it can drive you to work, to Disney World on that 7-hour trip, and just simply imagine what the use cases are going to be. And this technology isn't just going to be limited to cars, Jimmy. It's going to carry over to humanoid robots, which are going to be ubiquitous in 15 to 20 years. Tesla is way ahead of the curve on this. Elon is the guy to make it happen. He has proven everyone wrong turn after turn, time after time. And so as the market, by the way, has really gotten excited about names like Apple, Nvidia, AMD, and Microsoft, and I think rightfully so, by the way, Tesla has been one of those who has severely underperformed in the AI complex. They've looked at the Mag 7 from the outside saying, we want to be appreciated. We want to come in. The last couple of days has really been a turning point. Of course, I would have loved for people to buy it $180, $185 a share. We're now just printed $240. It's time to get long Tesla. Don't worry about Elon's tweets or what Joe Biden may or may not be saying about this company. 10 years from now, this is going to be the most valuable company on earth. And take it from someone who was initially dubious, who worked at the hedge fund known for relentlessly short selling this stock. It's time to go long Tesla and don't look back.
And that chart, the chart today on Tesla, it looks like a breakout from that downward trend.
Yeah.
I actually think, again, I don't make stock recommendations. This is for my lawyers. I can make recommendations on futures. My licensing is very specific. If it takes out those highs, I might try to get in Tesla as well, because I don't own any. Now, the self-driving thing, I have a question for you.
Yeah.
And this is something that really hits close to home. 1 week ago today, my wife, someone went through a red light, absolutely turned her CRV into a pile of rubble and put her in a lot of pain for about 3 or 4 days. My question is, how long do you think is a realistic timeline to think that self-driving will be ubiquitous and will stop bullshit like people running red lights and almost killing my wife?
I'm sorry to hear that, and I hope she's recovering
Better now.
well.
Yeah.
The data on this is pretty clear. So we are going to very soon hit 2 billion miles driven on Tesla FSD. I'm using this every day. It's not a question of if, it's a question of when. It's a question of how willing the regulators are going to be to open this technology up, even if you're not in the driver's seat. The truth is today, Tesla has the best safety rating of any car commercially available in the United States. For $199 a month, Jimmy, you can put her in the full self-driving subscription, which will drive her from point A to point B. Remember, when you and I are driving a car, our field is 120 degrees. This car has 8 cameras, 360 degrees all the time. It doesn't get distracted. It doesn't get fatigued. It sure as heck doesn't get drunk. And so this allows drivers to be safe. The numbers bear this out with respect to how often Tesla FSD is involved in collisions versus just a driver normally driving a Tesla vehicle, which is 10 times fewer. And so how often till it's ubiquitous? I think there's going to be some consumer preference shifts there as well. But I'll tell you right now, go buy a Tesla and you can use FSD. It will blow your mind. I even ask Tesla drivers when I'm at a supercharger in Daytona, Florida, or in Orlando, I said, how's FSD? And they say, what's that?
Really?
They have no idea. And that's why I call it a slow moving chat GPT moment. It's a chat GPT moment because it's a true, genuine paradigm shift. But it's slow moving because people aren't appreciating this happening. I have material non-public information because I'm driving the car every single day. I am seeing it do things that it struggled to do, whether it was a U-turn at my local McDonald's a couple months ago, or whether it was a merge change off of I-10 3 weeks ago. This product is becoming so impressive. And I actually get to compare it with what it was a month ago, 6 months ago, or a year ago. It is blowing me away. That gives me the confidence to be long the stock on top of the other addressed issues. Look, you don't have to worry about getting in at 250 or 300 at 350. Right now, we're looking at a $780 billion market cap. If we're even half right about Optimus, which is their humanoid robot, about Tesla, both FSD for the end user and obviously via commercializing it via robo-taxis, this will end up being a $5 to $10 trillion company 10 years from now. And so worrying about when to get in is almost immaterial. You do have to get in the stock because this is just going to blow this thing out of the water.
Next time I see you, James, I'm going to ask that you take me for a ride after we're finished with our drinks and not touch
Absolutely.
the wheel. You get no touching the wheel, though. I've got a comment that I want to put up because it made me laugh. And then we've got a question for you about Tesla. The comment is from incoming. Where is it? There we go. The real head of macro, which made me happy to see that. The question, however, is from Max. Max says, how much do you think Tesla will move once Wall Street registers the potential of full self-driving if the stock moved 10% on a 1% increase in production? It's a great question.
It's a great question. I would say this. If every Tesla short seller who I've known to not either own the car and much less use FSD, if every Tesla short seller went to ride with me in the car and use FSD for 45 minutes in and around Naples, Florida, they would cover their short the next morning and the stock would go up 100%. So that's the first thing, is that the short base on the stock is just eye-watering. These people they refuse. They don't want to drive the car. I talk to shorts. I'm like, well, have you been in the car lately? I'm like, I've never been in the car ever. And so that's a real problem. They actually think this driverless technology is some kind of Elon fraud. And so you have a really large short base that is dangerously either misinformed, uninformed, or chloroformed, and they are going to have to cover, and it's going to get more and more ugly as the stock price goes up. I will tell you this. I think Tesla is going to have its best day sometime very soon, and that's called August 8th. That's when Tesla is likely to unveil the hardware for what's called the robotaxi, what they're calling the cyber cab. It is built in the same factory as the new Model 2, which is their most economical vehicle, but it has no steering wheel, no brake pedals, none of that. It drives itself. And so I would love to see the largest short squeeze ever on Tesla. I think there's a really good chance that it ends up happening in and around the cyber cab unveil. The shorts are not prepared for what is about to come. They've been wrong at every turn, every prediction, Bobby, they have made about this company. Every single one. The Model 3 is going to flop. The Model Y is going to flop. FSD is never going to get past stage XYZ. Every single prediction they've made has been wrong. And so it's just surprising that they've continued to have the unmitigated gall, the unfettered intrepidity, and the unencumbered audacity to call Elon Musk a fraud. They need to look in the mirror, cover their short, and do something worthwhile for their investors.
Okay, so this
unencumbered audacity was unencumbered by what the audacity they had in the past.
That's right. That's exactly right.
I'm going to ask you a question. This is the most important question of the whole interview, and I want a very, very short answer. Did you have that chloroformed comment in your hip pocket, or was that off the cuff
spectacular
when you said it? Because it was spectacular. I fully expect it to have been, yeah, no, I've used it before. I just thought it was a good place to put it again. Yes or no?
I've used it before. My dad was a big fan of using it when I was a kid and still uses it every so often. And so I give my dad credit for that. But it's so true, right?
No doubt.
It doesn't matter why you don't understand the stock. If you don't understand the stock, just like Bobby, if you and I don't understand a price move in the futures market, the first thing we have to do if we don't understand something is cut risk, then try to bridge the knowledge gap. And if that knowledge gap is unbridgeable, get out of the stock. And so the short base, primed with the idea that we're going to get huge developments over the next couple of weeks on full self-driving. To Max's question, if this is what the stock does on a small increase in production, can you imagine what the stock's going to do when we have someone like Lester Holt on NBC Evening News in that cyber taxi going around New York City, going around Austin, Texas? These shorts are screwed. And as a result, by the way, every single short-dated call option in Tesla in and around this event, I believe to be egregiously underpriced. Because if you couple the short base with the fact that they so fundamentally must misunderstand the stock, we could be looking at one of the great short squeezes of all time.
All right, now Jimmy has to go, but we got one more question. And Jimmy, if you have to leave while he's answering the question, go ahead. This is going to be it, guys. It's again from Max, and maybe you don't even have an answer to this because I certainly don't. What are your thoughts on Ross Gerber's idiocy of late? I mean, I don't know. I don't look at Ross ever. So,
look, all you need to know about Ross Gerber is that this guy tried to pull the rug from Elon, tried to say that Well, the package that we agreed to, essentially an options-based equity compensation package that was agreed to based on some unbelievable targets that if Elon met, he should have gotten every penny. He petitioned for that not to happen. And then immediately when it happened, he deleted his tweets. I think that's wrong. I think it speaks to someone who really does not reconcile truth with reality. I would say this to Rob. Look at the fundamentals of Tesla. Stop trying to day trade this stock. We are looking at an iPhone style, Chat GPT style moment for Tesla here with the cyber taxi unveil. Stop trying to pick levels and stop trying to look at what the quarterly numbers were in China versus BYD. This is the best stock to not just own, but to own and largely forget about. And people like Ross end up over commenting and over trading on what has been an incredible story. This stock is now up 1,300% since some well-known funds that I dare not name started shorting it in 2016. And so we're just at the beginning of this story. And I can't wait for a lot of these people to be proven wrong. I just hope they don't delete their bearish tweets as a result.
Don't do it. Transparency is the key.
It's the key.
James, we are so fortunate that you have come into our lives to share this shit with us. I learn so much every time I talk to you. Thank you so much. You are outstanding. How can the people find you?
Easiest place is on a little place called X, James Fishback, J_Fishback. You know, some of you may heard about this head of macro thing. I am excited because I left a firm and I'm building a new one called Azuria. We are launching the Azuria Macro ETF, Jimmy. It's the first of its kind discretionary, actively managed investment fund that doesn't look bottom up, but that looks top down at some of the biggest market movers, whether it's in futures, whether it's in artificial intelligence via single name stocks. And I'll have more to share about that in the next couple of months.
Good. And share it through us too. We want to be a channel of distribution for you. So we'll put out there any information you want to get out there. But thank you to you people watching. I hope you enjoyed the show as much as I did. Remember, Bobby and I's mission when we left mainstream media was to get to a platform that was unburdened by sponsorship dollars and by the burdens of our past and the burdensome and onerous producers who try to make you say shit that you don't believe. Thank you for joining us. This has been Tradier, the Trader's Edge. We appreciate you being here.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.